Hi everybody, welcome back to the 10th of an Hour with Griffin Bridgers. It's my pleasure to bring you episode 100, another milestone in the 10th of an Hour. For today's episode, we're going to talk about a little known provision of the Secure Act, which expanded the hemisphere of early distributions you can take from an IRA or a qualified plan free of the 10% penalty. And that will be distributions for qualified birth or adoption expenses. So we're going to dive into the details of this distribution and the limits and options you have around it in today's presentation. Now, as always, this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. So, as I mentioned, Code Section 72T provides that a distribution from an IRA or a qualified retirement plan that occurs prior to reaching the age of 59 and a half is generally subject to a 10% penalty tax, which applies in addition to the normal income tax that you would have to pay on that distribution as well. However, over the years, they've added a number of exceptions to that 10% penalty, which will allow for early distributions without that extra 10% tax. Things like medical expenses, hardship expenses under the CARES Act relating to COVID, we talked about in a prior episode. Now, purchases of a first home, there's a number of them. We're not going to dive into all of those in detail, but we're really going to focus on this new exception, which is a new addition for 2020 under the Secure Act, and that's a distribution for expenses relating to a birth or an adoption of a qualified adoptee during the tax year. So, in order for the distribution to be penalty-free, you have to have a qualified birth or adoption expense. So, those are abbreviated as QBOAD expenses, and the following are going to apply. One, there's a limit on how large of a penalty-free distribution you can take, and that limit is $5,000 for each birth or qualified adoption during the year. So, if you have one child, you get one $5,000 distribution. If you have twins, you can get two, so $10,000. And not only that, you can aggregate this across parents. So each parent can get one $5,000 distribution for each qualifying birth or adoption during the year. However, you can't aggregate that across all your IRA or qualified retirement plans. So those are going to be aggregated. This is just a cap on the distribution across all your tax-deferred retirement-related accounts. So when we get into adoption, there's a little bit of a nuance. One, the adoption has to be for a child under the age of 18, or you can adopt an adult who's age 18 or over, but you have to show that they're physically or mentally incapable of self-support. We won't dive into the details on that, but another unique feature of this is that the distribution can be refunded to the IRA or the qualified plan in order to avoid the income tax on that distribution. Now, the Treasury has reserved guidance on the timing of this under IRS Notice 2020-68, which is a good read and has some Q&A on these specific distributions. But for the time being, you don't necessarily have to meet the 60-day rollover requirement, but the safest option might be to plan to try to refund this by December 31 if you wish to do so. You may, depending on guidance, be able to extend that out to the due date of the 2020 return, maybe to April 15th of 2021, but there's really no guidance, so you're in the dark on that if you try to go that route. Now, in terms of reporting, there's as we're going to see with repayment, it's a little unclear. Now, if you receive a distribution, you're going to get 1099-R from the IRA custodian or plan administrator. Now, there should be the correct code for the early distribution under Box 7, but this is kind of out of your control, so you may want to check this with your CPA. And you may have to request an amended 1099-R if that code is incorrectly reported or is left blank. Now, on your end, as the taxpayer, if you're receiving the distribution, you'll have IRS Form 5329, which reconciles the penalty on early distributions or lack thereof, and you'll have to submit that with your tax return for 2020. So, The early qualifying distribution for birth or adoption expenses should be included on Part 1, Line 2, and there's a code box there, and you'll need to insert code 12 in that box. And then with respect to a repayment, we're still waiting on more guidance. The IRA custodian or qualified plan administrator will remit IRS Form 5498 for that repayment, and that repayment amount will be indicated in box 14A. Now, my inkling is that there will be a new form for this, such as the form for hardship distributions and repayments, but there may not be, so you may have to wait and see what guidance is out there in 2021, if any. Now, I don't do a lot of work on the side of qualified plan administrators. I just wanted to throw these tidbits out there. One, that if you are a qualified plan administrator and your plan does not allow in-service distributions, then you don't have to permit the qualified birth or adoption expense distributions for an employee who is currently employed. However, you can elect to do so, and if you do so, you may have to amend your plan, and the IRS has recently, under Notice 2020-68, provided that you can wait until the end of your 2022 plan year to do so. Anytime before the end of that plan year, you can submit that amendment. And then there's no requirement to withhold 20% on the distribution, but you may offer voluntary withholding, and it may be a good idea for the taxpayer to accept that as well. But that's just a little bit on the Secure Act and a lesser known provision of it that's kind of fallen by the wayside with all of the focus on the changes to the required minimum distribution rules and the required beginning date. Now, as always, if you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. As we move forward in this series, the 10th of an hour, since we're now past episode 100, I'm going to start doing some things like adding more personal video into some of these, and also opening up the floor where other people can give their own 10th of an hour presentations. So if you're interested in either of those options as well, you can also email me if you'd wish to be a guest speaker on your own 10th of an hour presentation. Thank you again for joining me for this episode of the 10th of an hour, and I look forward to seeing you not only in the next one, but the next 100. Thank you.